This episode is made possible by U.S. Bank and Brex, the AI-powered spend platform.
Hi, it's Reggie Bengal, CFO at Trax Retail. You are listening to the CFO Thought Leader podcast.
This is episode 1067.
Not paying attention to the cultural impact. That's where there can be a lot of friction 6 or 9 months down the road. And that's where you want to address it because, neither the acquirer or the acquiree is going to be 100% get to keep the way it was pre-acquisition. And everybody has to really be educated on this, that we're going to come somewhere in the middle. Culture is always going to shift and change with acquisitions, and it's just always better to get ahead of it. The more you can get ahead of it and the more you can work with the teams and really communicate to the team about the changes, the better off you're end.
Hi, it's Jack. On today's episode, we'll speak with Matt Collis, CFO of PairSoft. For PairSoft CFO, Matt Collis, storytelling is more than a skill. It's a strategic tool for aligning teams and scaling businesses. Whether leading acquisitions or guiding cross-functional teams, Collis tells us he uses financial narratives to clarify priorities and inspire action. A pivotal chapter in Collis's career came at Transaction Data Systems, where he helped the company triple in size through 7 acquisitions. You'll hear about that chapter and much more on today's episode. We'll begin after this. Are you tired of manual, fragmented, and time-consuming expense management processes? Then the U.S. Bank Commercial Rewards Card might be right for your business. More than just a card, it's an all-in-one card, expense, and travel management solution that replaces outdated expense management methods with a single intuitive platform. Specifically designed to scale with your growing business, it provides the control and real-time insights into spend that you need. It integrates with your existing tools, lets you set custom spend policies, captures all expenses automatically, and liability is kept at the corporate level. Employees can even book travel right in the platform. You also get to choose your rewards, either points or rebates, all while saving money with no annual fee. So why wait? Manage your cash flow better and streamline your business operations today with the U.S. Bank Commercial Rewards Card. Visit usbank.com/CFO to learn more. Hello, we're speaking with Matt Collis, CFO of PairSoft. Matt, welcome.
Thanks, Jack. Thanks for having me.
So, Matt, we've enjoyed looking back at your bio here. Some companies we know we've crossed paths with in the past. If you wouldn't mind, take us back and try to identify some of those experiences for us that you feel prepared you for this role. What would those be?
It's a great question. And, I would say early on in my career, in college, I really had a line of sight that, I felt strongly about accounting, but I also felt really strongly about business and business leadership. And so in the very beginning, I really wanted to focus on getting some really good experience around just the technical accounting part. So really early in my career, focused on, did some stints as like a staff accountant, senior accountant, but then also did about 7 years in audit, couple different firms, was able to work on some publicly traded companies, some for-profit, not-for-profit manufacturing. That all really kind of culminated leading myself into kind of, I would say, that financial leadership role where I understood the blocking and tackling, the nitty-gritty of debits and credits, but also started taking roles outside of public accounting that were more leadership focused. So my first couple controller roles, while they weren't in the CFO realm, they were working directly with the owners, directly with key advisors, building out budgets, forecasts. And so really kind of transforming, understanding the business and the readout of the accounting, but then transitioning that into how do we help make more strategic decisions. And so that, for me, I was really focused, I would say my first 10, 15 years on building the skills that I felt were going to be needed in that CFO role. And then identifying, strong mentors that I could, and it doesn't have to be finance. Sometimes it was like a CEO, strong mentor that I would really like grab onto and follow them around everywhere, listening to everything they said. So that was I think those like having a good like framework as to what skills I need to develop really helped me to kind of prepare myself.
Yeah. So I just want to point out to the listeners that, you really were an accountant for that 10 years. I mean, you were, is it Computer Sciences Corp where you kick things off or?
Yeah.
Yeah.
Yes.
A staff accountant at CSC, a giant contractor way back when. And then on to a number of different places as an accountant, and you're sort of climbing the accounting ranks.
Yeah, I think that, accounting came really naturally to me. So I did, like, I enjoyed technical memos. I really actually enjoyed public accounting, getting in there and doing solving the problems. I was always really good, like, problem solver. But I think where I felt my heart pulling me more is on how do I help drive the business forward? How do I really take understanding the business and then working with operational leaders? And it was just kind of a natural pivot for me. Initially, I thought CFOs were just like the numbers, like they're the number guys, right? They would just, do the month end close. Here's the report. And then as I, got experience in working in small and large companies, someone has to be the storyteller. And I tell this to people, like, I think that's like in my particular, career journey, I ended up basically being the storyteller of the financials. And by telling the story and also leading, the operators to know what should they be focusing on and running their business that will achieve the company results, really helped to kind of be that glue in between those cross-functional departments. So it was kind of a journey that, to your point, I started out doing like 26 bank recs a month, calculating unearned premiums and doing these budgets, and just is very, I would say, just blocking and tackling, and then working my way up into public accounting, and then working in I actually enjoyed some of the smaller companies. I worked in a couple of smaller, like media company, cookware company. And in those smaller companies, they were also not as polished. And while that was challenging, it also allowed me more free reign to kind of really explore and work everywhere from working with the president to also working like with customer service in some roles, or HR, or doing payroll. But those really kind of gave me that really good framework.
Yeah, it's an interesting background that you do have, as you pointed out. Yes, you went from cookware, you went from large enterprises like CSC, and then I do believe transaction data systems was really transformative for your career arc. Really, you land there as a controller, a role you've already played at these different businesses that we were just describing. But here a lane opens up for you. Can you explain? And eventually, of course, you're their CFO for a period of years, multiple transactions in terms of integrations of businesses that you oversaw. Tell us about that. You land there, and did they first look on you as an accountant, or already was there a difference?
Yeah, that role was a turning point to what you call it out. And so they were private equity owned. So for the listeners, private equity is a very different like business segment where it's high growth, acquisitions, organic growth, integrating people, business, process, functions. And so when that position came open and I was able to land that role, I actually knew that was going to be really a career transformative position. I came in, developed their first budget, first board deck. I did everything from the not tax returns, but the provisions. And we started out right around, it was a 30-year-old company, and the company ran great. But with a private equity investment, we went on to do 6 acquisitions. And so integrated 7 companies over 5 years and tripled the size of the business and within a very short period of time. Through that time, I was able to have opportunities to develop a team from very small, 10 people to eventually taking on the CFO role, end up having a finance department of almost 30 and, a company with, over 500 employees in a very short period of time and working cross-functionally with the leaders. That was very challenging, rewarding. Had the opportunity to work with a career CEO, Drew Dierman, which also really helped me on I would say, really helping to develop that business leadership side. So came in with, I would say, like a really good toolbox of like blocking and tackling skills, and then really able to work, side by side with a career CEO and really kind of, learn those skills to be that storyteller cross-functionally, senior leadership teams, telling the story at the board meetings. And then eventually we went through a sales cycle and it had to really tell the story to new investors. How did TDS start? What were these acquisitions about? What are the things that someone should be excited about? And so all of that was, a kind of a career progression to kind of get me to where I am now, which is I've been in SaaS PE-backed businesses for about 10 years now as a CFO role.
Yeah, I just want to flag that number. Seven acquisitions you were involved with during your years there at TDS, and ultimately, is it sold to BlackRock? Is that right?
Yes, BlackRock Long-Term Capital. So,
wow.
Yeah.
So, and you could split pretty much your career down the middle there. You were in the CFO office for half of it, I would say, and the other half you're finding your way up there. It isn't too long, I would think, after that you joined PairSoft. And so we might have a few more career-related questions for you a little later. But right now, let's find out about this company, PairSoft. What is it about? What are its offerings today?
Yeah, PairSoft is an exciting, I would say, growing company. And it's also something that I would say is close to my heart. So what PairSoft does is it's in what we call the Office of the CFO offering. So it's a SaaS business. We have 2, I would say, like main products. One is on the accounts payable side. And so there's a lot of accounts payable automation plugins to ERPs out there. PairSoft has a product called PaperSave, I'm sorry. And what it does is it's a little bit different where it's embedded in the software. So many like accounts payable automation software, you'll go through the system, you jump into an external link, it's outside of the ERP, you might, process your invoices, get approvals, do the payment, and then it APIs the data back in. And our application actually sits as a module within your application. So the user, your vendor, payable specialist, they don't have to leave applications. It's within the application. So it really provides I would say like a cleaner, seamless workflow. And then we recently did an acquisition about 9 months ago of a company in the Netherlands, which really kind of took us even greater globally than we were before. That focuses on the e-invoicing side, which is a really big in the European, Central America, Latin America area of the world, and also like enterprise, like billing reconciliations for global companies. So in those 2 market dynamics, what was exciting to me is going into the company. It's got many verticals. It's global, not just from a customer base and an employee base. And, looking to probably grow into almost upper teens, lower 20%. And I think in the next 2 to 3 years, we'll be growing, 20 to 30%. So also private equity backed, which gives us a lot of, I would say like financial backing to do M&A, investment, growth. So these are all things that, for me is, really exciting.
You mentioned M&A, and of course you have a resume that says you're someone who has been involved in integrating companies. So I'm trying to think the chapter that you're now opening for them. As you arrived here last fall, it would seem to me, okay, Matt's coming on board. He's familiar with doing some acquisitions. We can expect it to grow through acquisition as well as some organic. Help us understand this chapter. When you said, yes, this is the opportunity, I'd like to be part of this. What were you signing up for? What is it that this company is now opening?
It's really the ability to scale. And just doing an M&A acquisition is much more than just buying a company and combining, you know, two different applications. You really have to look at the people internally, assess the people, the processes, the systems, and then look at 5 years down the road and say, what do we need to do to get there to really drive this business to grow? Some M&A deals are bringing on new vertical. Some could be bringing in a workflow within our existing customers. So when we look at M&A acquisitions, we will say, are we doing an acquisition to bring in a new customer base, or are we doing an acquisition to increase our revenue per customer? And so every acquisition will have its different characteristics and different thesis. And that's where I think my background kind of being in this private equity space is you have to understand what's your thesis? What are you trying to achieve? Once you do the acquisition, you have to understand that things are going to go wrong. You have to have patience that, it's okay if they go wrong. It's more important to identify when they're going wrong and what's the right course of action. And as long as you are kind of working, cross-functioning with the teams, everybody's aligned, it's a tremendous amount of fun and excitement when you can look back and say, wow, look at how far we've come. Look at the team. Look at the business. Watch to see how smoothly it's growing. So those are the things that it can be a little grindy. You definitely have to roll your sleeves up, and you're going to have good days and bad days. But when you can look back and you get the reward, it becomes all worth it.
Did you develop some type of framework or mindset for doing acquisitions? Like, here are the typical stages. Here's where our challenges will be with this particular acquisition. I'm sure there's some sort of framework, but I'm curious, as you evaluate and take on acquisitions, what lens are you looking through?
A lot of time, you are correct. So I will say, I am a fundamentalist in the fact that I do like to have a strategic plan. I like to have this is my thesis, and it goes everything what's the revenue, synergy, what's the plan, what's the cost synergy, what's the risk with all of these, and understanding how do I model it out and measure it. Personally, I really start looking at the processes internally. So I would say the products and servicing the customer, that kind of happens. But it's really, you start bringing in different cultures, and that's where things can be challenging. And if you're not, paying attention to the cultural impact, that's where there can be a lot of friction 6 or 9 months down the road. And that's where you want to address it, because, neither the acquirer or the acquiree is going to be 100% get to keep the way it was pre-acquisition. And everybody has to really be educated on this, that we're going to come somewhere in the middle. Culture is always going to shift and change with acquisitions, and it's just always better to get ahead of it. The more you can get ahead of it and the more you can work with the teams and really communicate to the team about the changes, the better off with your end. So I've seen it go bad. I've seen it where we did not, in my past, even in TDS. So we did acquisitions and we said, hey, they're doing great. They're growing. Just leave them there. They'll be okay. And so what ended up happening was we had these silos of companies that weren't communicating, and then they started going in their own directions. And so at the corporate side, we'd say, oh, this is what we expected. And then, at the acquiree side, they were like, no, that's not what we want to do, because we didn't actually get out ahead of it and start integrating cultures. Once we did the cultural integration, we got a buy-in on the plan, the buy-in on the future vision of the company. Things really started moving. So that was a big lesson learned for me, is, get ahead of those tough conversations, really start, educating where we want to go with the business.
And then that's that cultural integration. How is that done? And, I'm sure your private equity partners might have some insight into that as well, given all of what they're involved with. But for you as a CFO, do you rely on, do you have consultants or specialists who try to help understand how to, change a culture is very challenging, can be.
It is. And every company, depending on the size, I would say really leads to where we would go. With TDS, it was when we got to a certain point where we had done like 4 acquisitions, the company size was now exceeding 100 million in revenue. We really brought in I would say more of a corporate head of human resources that could really drive cultural change and really kind of own that. At PairSoft, we're not there yet. So we really have to within the leadership team, we really tried to, after the acquisition, we have quarterly on-sites. So we're a remote business, but just because we're remote doesn't mean that the leadership team doesn't meet quarterly. So leadership team is meeting every week virtually. Quarterly, we're spending a week off-site. And that's really kind of how I would say like a tone from the top, really bringing in those, everybody in leadership team across the acquisitions to align on the strategy, the goals, and then also listen, just like, how are you doing? Tell me what's going on. I'll even, phone up the person, who's like the main, let's say a finance, say like, how's everything going with the team? Like just beyond just the accounting, just tell me what's going on. Is, what's going good, what's going bad? Just like give me the feedback. So I try to do some informal like step downs where I'll just like reach out to somebody and just have a regular conversation just beyond the books, beyond the numbers, because I fundamentally believe that employees want to add value. Like I think people go through life, they want to do a good job and they want to add value. But if they're not aligned with what the company's expecting, it's very easy for them to be disheartened. So when we have these changes like goals and culture, sometimes it's hard because I'm not going to talk to all the employees, but I really try to lean in on those managers to kind of help, provide feedback.
We're talking about communication. It seems like it's the biggest part of this. If you were to boil it on down, cultural change happens one conversation at a time. Are your people prepared to help you take on this challenge, your team?
I would say they are. I try to lead with like full transparency. It works well for me. I actually call them sermonettes. And my staff I'm like, just bear with me. I'm going to give you a lot of information, but I'm going to tell you the why. I call them a sermonette because sometimes they can be a little long-winded. But my goal is just that everybody understands the vision. And from a finance department, I really do rely on my controller and my director of finance to work cross-functionally with the teams. Like they're going to be there working, either providing like, even if it's just like a financial analysis or like an expense report, but really kind of as we work cross-functionally with other orgs, I don't generally, like from finance standpoint, I don't see us as a silo. I see us as like a connection between the different departments. So generally, I'm very forthcoming on like in developing the budget, the why, like what's important, why should we be tracking this metric? Why are we controlling some costs and investing in other areas? And so like I might have a mature product that I'm going to kind of focus more on controlling costs versus, we've got a new product with e-invoicing. We're really expanding our payment side of our procure to pay. And so those are areas that we are investing in, but I try to be transparent to the organization as to why we're doing this. So someone's not like, oh, like, why aren't we like investing dollars here? Because, well, our growth levers are really expanding e-invoicing internationally, bringing our payments across all of our 2,000 customers and our procurement side of the business. And so, really making sure everybody's aligned on, the strategy and where we're going.
Since your arrival, is there a particular number or metric that you've sought to raise the profile of or let the team know you're going to hear more from me on this particular metric or anything?
A couple of things. One, in probably the private equity space specifically, but even just generally, we really like to look at I would say the cost allocation of capital. And what I mean by that is like, for every revenue dollar that we attain, how much do we spend on cost of sales? So like right now it's around 20%, which is like the gold standard of software. And then we've got, how much are we going to reinvest of those dollars in sales and marketing, product and development, and G&A. And so for us, really, that management team understanding what does that cost of capital mean? Because if we look at it and we go, okay, we really want to grow, intuitively you would say, okay, we're going to spend more in sales and marketing. So if my sales and marketing is flat year over year and I'm growing, if someone might say, well, how are you going to grow if you're not investing in sales and marketing? But then to leadership, to my leadership team, I can say, okay, we're going to grow by 15%. But I'm actually going to keep my sales, and while my sales and marketing budget is growing as a percent of revenue, it's maintaining. So I'm scaling appropriately. And that's where, like in a high growth business, it's okay to increase costs. Like that's a great thing, but you have to make sure that you're increasing costs at the right lever as your revenue is growing. So those are the metrics, like really educating the team, where we're spending and why we're spending. That has been a big focus of mine, kind of coming on to PairSoft with the acquisition and really kind of, growing this business over the next 2 to 5 years.
Matt, we want to touch on AI with you. Wondering what the AI conversation at PairSoft might be about. Is it a strategic advantage, as so many companies will tell us their AI story is? How does it apply to PairSoft?
I would say we are leveraging AI. If it's a strategic advantage, it's because our competitors aren't using it yet. So we did, I would say, launch our phase 1 AI within our procurement side. So, one of our market advantages, we have a really good OCR scan of the invoice comes in, it reads it automatically codes the vendor, the amount. Like it can already kind of do a lot of the basic blocking and tackling. But what it doesn't do is your invoice doesn't tell you where to code it. So one of the things that we've launched over the last, 6 months is that AI coding. So the user already gets, when they get the invoice and it comes into the system, it's pre-populating the vendor, the address, the amount, based on the vendor, who should be approving it. And now it's saying, reading, okay, what would you normally code this invoice to? Let me go ahead and give you a jump start. Here's where to code it to. So that user can just basically just checking to make sure that the software does it all for them, and then basically send it off to be reviewed. So, speed of efficiency, really kind of, getting closer to as automated as a process as we can get.
Well, thank you for that. We'll move to what we refer to as our finance strategic moment question. And again, this might have happened to you last week, or you might have had a finance strategic moment some more than a decade ago. Anything come to mind when we ask for a finance strategic moment?
I'll circle back to the storytelling and some of the whys. And in businesses, I would say like PairSoft, and most recently, like I was at Build Out, which was about the same size software company, kind of being able to come to a company that hasn't really had its financial side professionalized, like really like, being a business leader. And so back to the storytelling of being able to explain the business to the leaders and have them go, oh, I get it. I understand why, certain metrics, and some of the stuff might be simple, like, tracking, why is, your customer count important, or your, retention rates are important. A lot of people don't understand that, but then understanding how are we going to, manage our expenses, and how does that actually like fundamentally impact cash. I will say cash is an underrated thing. So many finance executives, they just kind of like look at revenue, look at expenses and go, okay, cash is just going to work itself out. There's an old saying that some of your followers, like cash is king. So like, I've been around long enough where I've seen it where we run out of cash. I've been in businesses where like cash dries up and it's painful. If any of your listeners ever want to like read a phenomenal book, it's called Pipe Dreams by Enron. So the reason Enron collapsed was it ran out of cash. That was like the fundamental. They were borrowing based on the stock price. The stock price tanked, all their debt got called, and the entire organization just went belly up. Now that's not this case, but it was just like it's a great read. But one of those aha things is like you have to always manage the metrics. You got to manage earnings. You got to manage revenue growth. But you also have to manage the way that you grow revenue. If you try to overinvest and you don't get the ROI, what ends up happening is you start running out of cash because those revenue growth targets aren't converting to cash quick enough. So it's one of those things that I think new CFOs can very easily get caught into, of not really looking down the road and making sure that their models are converting to cash enough to pay the bills. Or if there is a pitfall, that they're not raising the flag. This is where early CFOs can get caught up in saying, yeah, the business is growing, everything's fine. I've lived it. I've lived it both on when it's good and lived it when it's bad. I mean, and shooting during COVID, many of us went through a point where, customers and suppliers were holding back and we were running out of cash, and we had to I was managing cash on a weekly basis to get through it. So, cash is an underrated thing, maybe strategic, maybe not, but I would definitely say something that would want to share with everybody.
Is there a question that if a finance leader approached you and was concerned about their cash situation, what is the question given all your experience there and understanding of it, what is it that you would ask them?
First is, how is their, AR conversion? I mean, that's one of the first things is what is your billing cycle? I will first look at what is I call it order to cash. So everything from when an order comes in, you either sign a quote, whether it's, manufacturing or software, what does that cycle look like? And has that cycle changed at all? That's the first thing, because that's going to be your cash inflow machine. Then the second thing is, looking at your growth rates. So comparing your revenue growth rates to your expense growth rates. And so it can be very sneaky where you might be adding a couple of, software services, or you might have added a new office or a few employees, and it's just starting to creep up on you. No different than if you look at your personal budget and you start adding new services, whether to a subscription or you go buy a car. And if your income isn't growing as fast as those expenses, you might not notice it in the beginning, but it will slowly start catching you. So first is order to cash. And then I look at the trends, the trend line of my revenue. Because if I know my order to cash is okay, then I start looking at the trends of how are my expenses trending? Then the last thing will be, is there any big, I would say software CapEx. I would say outside of your income statement. So you have outside of your income statement charges. You could have in 2022, a lot of companies got challenged with raising interest rates. So if you had variable interest rate loans, interest rates went up. And that was an area that we looked at the business, and the business looks great. Where's all the money going? Well, our interest rate just went up by 4%. And it just sucked the money out because the models weren't attuned to that increase in interest rates. So there's probably in my role, I probably have 10 different steps, but that would probably be the quick rundown that I would go through.
Have you heard about Brex? It's the world's smartest corporate card. Finance leaders love it because it's got powerful controls and rewards that help them make every dollar count. Here's why Brex cards are so smart. You can embed your expense policy inside the card. This lets you control employee spending before it even happens. Brex cards also automate manual expense, tasks like receipts, memos, and reviews. So you're freed to focus on optimizing your company finances. Over 25,000 companies take every dollar further with Brex. Join them at brex.com/grow. We're going to jump to our mentoring round where we want you to think back to that first 90 days that you stepped into a CFO role for the first time? So it would have been that transaction data systems. It would have been after you climbed the ranks there. You're in that role. What is headed into that role now? If you could have gone back in time and give your younger self, wasn't all that long ago, but your younger self some advice, what is it that, you were prepared for so many things. You would work closely with the CFO, but there is still something you wish someone had told you. What, if you could go back in time, what would be that piece of advice you give yourself?
One thing I'll say is it's okay to be patient. I think as an early CFO, I was super eager to win, to please, to do the right thing. And that also stressed me out because every little mistake was elevated in my head, and learning like it's okay to be patient, like it's okay for things to take time. The second thing would be really understanding what's important to the key stakeholders. So as a CFO, every board, every CEO, every leadership is going to have different things that are important to them. And it's very easy for you as a CFO to say, "Oh, this is what we should be this is what we should be paying attention to. This is what that matters." And you really have to go and have those conversations and just say like, what is it that you want to understand about the business? What is it is going to drive the right decisions that you are guiding the business? So really kind of having those conversations with those stakeholders to make sure that as you roll out your own 90-day plan, which some of it might be like internally focused, you want to make sure that you are providing value to the organization. Because ultimately, the CFO office is not, I think delivering the right results if it's not bringing value. Just bringing results is not gonna drive key decisions. So for me, it's making sure that I'm articulating the story that's meaningful, that's going to drive the right decisions that those leaders make, because they're on the front lines, right? They're the CEOs out there saying like, where should we focus our sales team? Where should we focus our R&D? So if I'm not doing this to look at the metrics and say, well, this product margin is like 30%, this one's 80%. We should probably be focused on the 80%, growing that one. And so, and it's just having those conversations with those key leaders to really understand like what's meaningful that they need to hear.
I'm also curious, Matt, because it seems to me, we talked about storytelling. You've probably long always excelled in communication. I'm not sure that's the truth, but that would be my guess. We talked about culture change with you, how important communication was for that. And you do a lot of outreach for that, but that's not your background. Again, a decade in accounting, that's not necessarily the resume of a great communicator, somebody with those interpersonal skills to do that outreach. I think you probably always had this skill set. Not that you didn't grow it, but as you look back, am I close to the reality or no? Do you think there was a time where you really had to apply yourself to grow and do more of the outreach and connect with others in a more meaningful way, and it just wasn't something you addressed in the past?
You're 100% correct. I would say an introvert that tries to play an extrovert the best I can. I am definitely, happy doing my analysis, being in spreadsheets, like that would be okay with me. But I also really enjoy bringing value. So I'm not going to bring value just focused on spreadsheets. Throughout my career, I just identified that I'm going to have to really be a good listener, and, working cross-functionally with non-financial people, like, making sure I'm communicating in a way that makes sense to them beyond just revenues increasing or expenses are decreasing or expenses are increasing, but like why? Like we just hired like 10 people and that's increasing our costs. Like that's more meaningful than saying, expenses are up. And so I think probably throughout my career, I would say audit was a good area. As an auditor, your first 2 years, you're mainly just focused on ticking and tying, you're reconciling information. When you start getting to a manager level, you really start having to work with your team, you're working with the clients, you're working with the partner, you might do some presentations to the client side. And then as I, moved in my career and specifically at TDS, I had the opportunity to sit at the board level. So I think that's where like that was like that transformational side where I attended the board meetings. I went to the leadership. I had to present in front of the leaders. I had to present in front of the board, and it did not come naturally. I did like purposely, like I would watch the room and I would say like, who do I think is doing a good job, and how can I better like learn from them and listen to like the way that they're speaking, the way they might pause, and try to, articulate that in my own way the best I can. But it has been a kind of would say a work in progress throughout the years.
Excellent. Thank you. Thank you for the extra detail there. We like to ask our guests to reflect a little on the personal side. You're rather new there, so I imagine there are a number of things your colleagues might not know about you, but what would you share with us? Something most people might not know about Matt Collis.
I do like adventure, and I think that's the up for the challenge is why I am in private equity. So if you were to scroll way back in my resume, you'll see actually when I was 29 years old, I was working in public accounting. I had this, I had my partner and we said we really wanted to travel. We actually quit our jobs, canceled our cell phones, sold our cars, and did like an 18-month, like saved up money. Of course, I had a budget. So as a good finance person, I had a budget for every country, but we backpacked around the world for 15 months and just kind of had a mid-career sabbatical. It was great. Came back. And I came back and was ready to go back to work. Like it was a goal. I achieved it.
Yeah.
Very rewarding. But I enjoy what I do. So I came back and went back to work. And then I'd probably say the other thing is I am a motorcycle enthusiast. I do wear all my gear like a good finance, risk, manager.
Risk averse.
It's like I'm risk adverse to a limit. It's like, I enjoy the ride in the motorcycle, but I do it in a way that's, respectful to the risk that you're taking. But I think it's the getting out on the road, clearing my mind, and you really have to be in tune with everything of handling a motorcycle, that I enjoy the like intellectual stimulus of the activity. So
do you have a favorite make or model or
I do enjoy. Funny enough, I own a like Ducati like sport bike, and then I own like a Harley like touring.
You do. We had another finance leader who has a Harley habit, so it's great to have you. We have a community now. That's wonderful. Thank you for that. You mentioned the Enron book. I don't know if you have another book selection for us, but thought I'd ask just before we get off. If not, I don't have to prod you some more. Something that's influenced you in some way, something you enjoyed. I don't know.
Yeah, I would say in a non-finance way, but it actually spoke to me was I think I wrote it down, extreme ownership. And so this is like a popular like management, it's a military background. So I actually come from a military family. My dad, 22 years, my uncle, 27 years, two cousins that retired. So there's a lot of, for me, the ownership of what you do, but also there's a team dynamic. It's also like, how do you lead from the front, but then also really empower your team to own their activities. And so that's what I like. That philosophy is actually like, when I read the book, I was like, well, this is one thing, like I learned a lot, but then at the same time, it was like reinforcing like my personal philosophy I've developed, which I think as you grow and scale teams, you have to learn to rely on your team. You cannot, as a manager, be expected to check everything that they do. You have to really say, like, I'm going to entrust that this team has ownership. And then something goes wrong, that they let me know. You'll never be able to grow and succeed without a strong team below you.
Excellent. Well, thank you for that. We are up to our final question, where we'll ask you to look forward finally for us. And what we want to know are, what are your priorities as CFO of PairSoft for the coming 12 months? What would those priorities be for you?
Yeah, coming into the organization where they just did a pretty significant acquisition that has different systems, different people, it's really aligning the systems and the people and the processes to be able to go from where we are today and double the size in 5 years. And so from my mindset, it's really focused on scale, making sure we have the right people, processes, and systems in place. We're identifying those things, but also that I'm not going to do it on my own. So like for me, it's really like making sure that I'm empowering the team collectively to help solve these problems. I have a vision because I did it before at TDS, but at the same time, I really want the people to kind of be able to own that. But so really it's those systems to be able to grow and scale. And then also really improving, I would say the story, I'm going by the story, but the reporting to the leadership team. So like that's an area that I know that we can improve to really drive feedback. So like if somebody's in customer support, like they play a role in how their metrics, impact the entire company, both retention and sales. And then, sales goals, in fact. So when I do generally a monthly readout deck for the entire leadership, it's just not finance. I like to have, here's finance, but then here are the key KPIs that we're all tracking and managing to. And we'll have like a budgeted monthly KPI deck, and then we'll be tracking like, budget to actual. And then I generally, in my decks, I'll have some data and then 3 bullet points. I like in my emails, on my data, I just like, if it's more than 3 bullet points, nobody's going to read it. It has to be like short and crisp takeaways. So,
Hey, Matt Collis, thank you for joining us on CFO Thought Leader.
Thank you, Jack. Thank you for the time.
Hello, everyone. Jack here. Hope you've been enjoying our recent episodes of CFO Thought Leader. Please know that I don't take for granted this opportunity to serve you. Your time is valuable, and of course, so is the time of our CFO guests. I'll admit to you on certain weeks, I will pinch myself and say, hey, I get to do this for a living. I speak to all these impressive leaders. Undoubtedly, there are more aggressive interviewers out there, some who leave no stone unturned. But our swim lane is for finance leaders only. And those finance leaders have a unique style of leadership, one that is rooted in the burden of trust. In light of this, finance leaders must take great care not to forfeit this trust as they step into the role of being a more expressive leader. And that is what CFO Thought Leader is really about. That's why I try to remind myself week in, week out, how fortunate I am. Still, I need your help. Tell us what we're doing right. Tell us what we're doing wrong. Email me your comments at jack@cfothoughtleader.com. And please visit cfothoughtleader.com. You'll find a listener survey right on the nav bar. As always, thank you for listening.